Welcome back. I spoke with White House National Economic Council Director Larry Kudlow in an exclusive interview about the state of the economy, coronavirus and its impact, and whether we can expect tax cuts 2.0 this year. Watch. It was such a mixed week in terms of market performance and what investors were focused on, whether it be the strong backdrop or the fears over coronavirus. Give me your assessment of where we are right now in terms of economic growth, Larry.
Well, look, I think the fundamentals here in the U.S. are superb. We are in a blue-collar boom. Actually, we're in a women's boom. Maybe we'll talk about that later, too. You know, we had huge job numbers a week ago. Wages are rising. The low wages are beating, the production workers are beating the managers. That's very important. We're seeing a big pickup in housing, Maria. That's going to be very important. I don't know. We have to fight off some Boeing headwinds temporarily, maybe some virus headwinds temporarily. I still think after two big trade deals in China and USMCA, because of the president's policies of tax cuts and deregulation and energy independence and greater markets overseas with the good trade deals, I still think by the second half of this year, we can get back to a 3% growth zone with a historically low unemployment of around 3.5%. I think it's a very solid economy. And by the by, that's what the stock market's been telling you.
Yeah.
Even with some wigs and wags on the virus story, stock market's telling you that. And I think consumer net worth is a big cushion for spending and jobs.
Yes, no, I agree. The backdrop is solid. And when you look at wages, it's real strong. But I want to stay on coronavirus for a second because people are just uncertain because of all of these unknowns. So, Larry, when you see China pretty much shut down because of this virus, no flights going in and out, number of companies shutting operations down there, what would be the practical impact? Is it supply chain disruption? Is it, the fact that we're going to have shortages in components and parts? Is that going to impact earnings? I mean, how significant? And I recognize you don't think it will be all that significant and it comes back by the second half of the year. But what would be the practical impact?
Well, look, it's hard to be precise. I understand that. Some people are reporting a peak in the Chinese virus revelations, the head count. Now, that may or may not be true. I'm seeing conflicting information on that. What I want to say here, and I talked to Dr. Fauci about this, who's the best in the business, in the USA, it is completely contained, Now, Maria, if that story changes, things will be worse. But right now, it is completely contained here. Now, your point about the supply chains over there, because Chinese industry is shut in, is an important point. I grant you that point. How do you quantify that for the U.S.? Awfully hard. We're thinking maybe in the first quarter, we lose 2 or 3 tenths of GDP, 2 or 3 tenths of 1% of GDP. That's in line with some of the private analysts. But I acknowledge a lot of uncertainty here. Let me make this point, however. U.S. manufacturing inventories are at rock bottom. In fact, it cost us a percentage point in the fourth quarter. So it is quite possible that some of the slack in the supply chains could be picked up by semiconductor makers and automakers and other parts of industry here in the U.S. That is a possibility.
Are you working on another tax cut plan right now, Larry?
Yes, we are. Tax Cuts 2.0. In a meeting in the Oval, I guess 2 days ago, he looked at me and he said, let's get it out by September. I've been consulting with the House colleagues, my great friend Kevin Brady. I will be consulting with Senate colleagues. We've got some great internal ideas and other outside advisors. I might even come to you to see what your tax program is going to be. We'd love to have a 10% middle-class tax cut. And we would love to strengthen and make permanent some of the other tax cuts. That includes 100% expensing, by the way. And we want to fix that because there was a glitch and building structures should have gotten it but didn't get it. there are other matters, universal savings accounts. There's a lot of things out there. I don't want to make a forecast or prediction yet.
Okay.
In the budget, my great friend OMB Director Russell Vought has put a $1.4 trillion plug to make tax cuts permanent, and we'll probably use that to craft our package. It'll come out sometime in September. It's a second-term issue, Maria.
Okay.
No, it's a future issue for middle-class tax relief and stronger economic
All right,
growth.
let me move on to the Federal Reserve, because we did hear from Jay Powell this week in his testimony to the House and Senate, and Powell said that the Federal Reserve expects inflation to rise to 2% this year. There have been worries about inflationary issues when you see more workers and wages moving up. Your reaction to Jay Powell this past week, and what about the prospect of inflation, Larry?
You know, I just have this peculiar view. I've honed it over the past 40 years. Here's the view. More people working successfully do not cause inflation. More people working is a good thing, not a bad thing. Inflation is excess money and a collapsing currency. We do not have that. We do not have that. What we do have is low unemployment, and you can take those Phillips curve trade-offs between unemployment and inflation and throw them out the window. Now, actually, Jay Powell is saying that, which is a good thing. I am glad the Fed is expanding its balance sheet again. I think it was a big mistake in 2018 to shrink the balance sheet and raise rates. I want to see him do that some more. Even on the Fed funds target rate, they've moved in the right direction. But, you know, Maria, sometimes I wouldn't mind seeing a little bolder Fed. To your point, there is virtually no inflation. Market price indicators, look at your break-evens in the Treasury bond market, are predicting 1.5% inflation. So I think the Fed has some elbow room on that score.
Okay.
And I do not see any inflation at all in the future.
But you just said, when we're talking about economic growth, you said that we'll probably get back to the 3% number in terms of economic growth by the second half of the year. The Fed made a prediction this week, too, on growth. And the Federal Reserve said that GDP in 2020 will be at or slightly above 1.9%, Larry.
Yeah, well, that's the conventional view. Fed, CBO, lots of other these models that don't understand supply-side tax cut rates and supply-side incentives. Here's a thought. We'll leave it here. We're not going to settle this today, but the last 4 quarters, productivity, output per hour, is up 1.8%. Now, that's a pretty good number. That's back from 0 a couple of years ago. And that is because I think of our business tax cut incentives and regulatory reform. So look, 1.8% productivity. The labor force is growing about 1.3 or 1.4%. When you add those two things up, you get close to 3% potential GDP. I think a lot of these economic models in the government in Washington and the private sector on Wall Street underestimate America's potential to grow. And I think the blue-collar boom and the women's boom and the great low unemployment without inflation is telling them they're wrong. So I remain my usual optimistic self. The president is an optimist. That was what his State of the Union speech was all about.
Yep.
That's what his Davos speech was all about. Optimism and leadership, and America doesn't have to be second best.
More of my one-on-one with White House economic advisor Larry Kudlow when we come right back. Stay with us.